Yes, sir.
Okay, let me continue. Selected MPSAS. Why I said selected? Because there are so many MPSAS, okay, just like what you have in MFRS. But then I just selected MPSAS, which is a bit unique in the case of four public sector organizations. Okay, whereas the rest, I know that shares similarities in the private sector. Okay, and that's one. Yeah, I think that's the main motivation of share of how I was selecting these different or several MPSAS for class discussions. Okay, so in previous class we already discussed on MPSAS 1. So in this class from 9, 17, 23, and 24, we reserve for the last for the next class. Okay, the first one, MPSAS 9. Okay, basically 9 and 23. Yeah, they are both are basically revenue, but for MPSAS 9, it's revenue from exchange transactions. Okay, so whereas in MPSAS 3, it's revenue from non-exchange transactions. Okay, because I think they keep them separate because there are type of revenues considered basically received from exchange transactions like sales, providing services. Whereas there are also types of revenue from donation, transfer, tax. Okay, they consider that as from non-exchange transactions. Fine. Okay, so we'll see the example because today, okay, we use the slides as well as the manual to just highlight on the more details of the discussion. And then we'll cover on PPE as well as MPSAS 24. Okay, MPSAS 9, revenue from exchange transactions. Okay, income is recognized based on trade and exchange transactions. Okay, I think very closely, very similar to MFRS. Of course, I mean, at this point, the government in for public sector, they yet to have separate standards on as what you have in MFRS, where you have revenue from customers as a separate standards. Okay, but still, if you look at PSAS 9, is basically income derived from trade and providing services. So example, income from services provided, trading goods, interest income, petroleum royalty. So categorized under revenue from exchange transactions, dividends, okay, investment in companies in equities. Okay, you receive dividends, rental is definitely based on various form of rentals. And if there are certain types of properties basically for rental purposes, then you have a specific category, investment property. And similar distributions of income resulted from use of asset by other external entities. Okay, so I think so the revenue is very quite clear. So basically from the use of assets by external entities. Okay, definitely asset here mean referring to owned by the government or controlled by the governments. Okay, that is MPSAS 9. Okay, MPSAS 23. Okay, revenue from non-exchange transactions, basically taxes and transfers. So I think taxes are tax. Okay, I mean quite familiar, isn't it? Okay, you have corporate tax, individual tax, and then including what do you call it? Duties, duties excised by the custom duties. Okay, quite a lot of money from there. Transfer shares similar trade where the resource transfer from one entity to another with the exchange is similar values, and they are not taxes. Okay, so there's another form. So they're considered as a donation, a revenue. Okay, in the case of MPSAS. So transfer include grants, okay, debt forgiveness, fine or donations. Okay, in kind, cash, good, or services. Right. So with that, may recognize asset, revenue, and liability. There's a potential here that not only recognition of revenue, there's also that kind of transfer may give rise to assets and liability. Of course, I mean, it's very obvious if the assets are basically, if the transfer is basically in the form of asset, it will give rise to revenue, assets, as well as revenue, okay? But there's a possibility of liability, yeah? In a non-exchange transaction, an entity either receive value from another entity without directly giving approximately equal value in exchange, or give value to another entity without directly receiving approximately equal value in exchange. Okay, I mean, that's obviously why they call it non-exchange transactions. Okay, the recognition. Okay, once the transaction is based on the non-exchange transactions. Okay, because it can give potentially the assets as well as revenue. An entity will recognize an asset arising from non-exchange transaction. Because obviously these are non-cash, sorry, yeah, I mean cash, even cash, basically asset. From a non-exchange transaction, when it gains control of resources that meet the definition of an asset and satisfy the recognition criteria. An inflow of resources from a non-exchange transaction, other than service in kind that meet the definition of an asset, shall be recognized as an asset when and only when, okay, there's a criteria here, it is probable that the future economic benefits or service potential associated with the asset will flow to the entity. And also the fair value of the asset can be measured reliably. Okay, I think just a quick review. So if you can see that there's a definition of asset where basically the asset is, if there is inflow, okay, potential future inflow of economic benefits. Okay, basically, generally this is what it means, is basically future cash flow. But for the government, not only future cash flow, okay, don't limit only to future cash flows. That is what is there for the private sector, okay? So all assets basically related to, you know, the impact of converting of all those assets into future cash flow. I mean, that will be the basis of the valuation of the fair value, but including all service potential. Okay, so all service potential. So basically, not both. So one of them, either it is for future economic benefits or service potential. So basically, service potential is, I think, will be later on we see. But basically, providing services that enable the organizations to provide services. So it's a service potential associated with the asset with flow to the entity. So there are both. These are unique for government entities, not only for future economic benefits, but for service potential as well. Okay, that once that it meet that criteria, and then the fair value can be measured, so you can then the asset will be recognized. Okay, recognized means here, what does it mean by recognition? Basically put in the book. An inflow of resources from non-exchange transaction recognized as an asset shall be recognized as revenue, except to the extent that liability is also recognized in respect to the same inflow. Okay, so if there is no recognition of liability, so the basically amount of the asset, the corresponding entry will be the recognition of revenue. As an entity satisfies a present obligation recognized as a liability in respect of inflow of resources from a non-exchange transaction, recognized as an asset, okay, it shall reduce the amount of liability. And then with that, with the amount of reduction in liability, is equal amount of revenue will be recognized. Share the PowerPoints. Okay, come back. Now we move on to measurement. Revenue from non-exchange transactions shall be measured at the amount of increase in net asset recognized by the entity. Okay, so that's another way. I think definitely increase in net asset will be the amount of revenue as a result of recognition of the asset. Okay, so of course, I mean that that is basically reflecting that the liability is being deducted. So if you remember, what is the formula for net asset? Anyone? Anyone remember?
Current asset minus current liability.
Oh, that one is net current liabilities.
Sorry, wrong answer.
So net asset is basically total asset minus total liability, isn't it? And then representing basically equal to the equity. Anyway, but here is about increase in net asset. So you can, it means that the amount of revenue is taking into account the reduction of the liability. Okay, when as a result of non-exchange transaction, an entity recognizes an asset, it also recognizes revenue, okay, equivalent to the amount of asset measured in accordance with the paragraph 42. So for non-exchange transactions, the value should always be fair value of the assets, because it is not purchased, so you don't have the basis to estimate the cost. So the only available valuation option is fair value. Okay, let us look at the example in the manual. Okay, page 189. Okay, page 189. I think this manual, I think I already mentioned that, isn't it? Has been shared in your Google Classroom. So we just look at the example of both, exchange revenue. Okay, there are type, rendering of services. Okay, not only that, okay, as providing the services, there are also timing for recognition. Okay, so I think this one is quite, very similar to the accrual accounting, basically. When once you can provide the services, there's a trigger point where the services, the revenue can be recognized. Okay. The only thing is, of course, not to the extent of what you understand with revenue from customers. Okay, I think that one is more rigorous in that sense, because you have to link directly the contract terms and performance obligations and others. And of course, these are at this level, the stage of completion. And then I think there's also, you have to take into account, because sometimes the services are provided more than 1 year. Okay, so the timing is all need to be taken into account. Rendering of services, okay, can be housing, schools, okay, court admission fees. It's an example. Sale of goods, okay, if the government basically sales of goods, right? So you can read this, and then the interest, okay, royalties, dividend, rental, okay. But rental, I think they provide here on straight line basis over the lease term. Okay, when the federal government of Malaysia act as a lessor, I'll say quite straightforward. So even they provide the policy here, straight line basis. Okay, so one method, okay, for some reason. I think quite reasonable, because rental is basically, straight lined, because the amount is basically, possibly equal, isn't it? Monthly or by period. Unless they use different bases how to come up with the rental payments. Maybe straight line may not be relevant, so that can be justified. All right, that's for the based on exchange transactions. Now we move to non-exchange transactions, revenue from non-exchange transactions. They call it non-exchange revenue. Income tax, I think pretty much. But income tax, once, okay, definitely now with accrual accounting, this will be different than cash accounting. So that's why if you look at the timing for recognition, is based on when it is payable by the taxpayers, even by reference of assessable income, right? But if you look at this timing, it doesn't say it become taxable or it's become payable by the taxpayers. It's just based on the assessable income, so then it can be recognized. So in other words, yeah, that's very true. I mean, that's what happened, isn't it? The AG or the inland revenue based on the income, even not sometimes is clearly submitted to inland revenue. But some, if you look at the court cases, when there are certain income not declared, and then the inland revenue also provide the assessment for the tax. Okay, so I think that's also pretty much consistent with this policy. When to recognize the receivable, the income tax receivables. Income and not only, okay, that's another one. For income tax deduction received through the pay as you earn is recognized at the point of receipt. So unlike the first one, the second is like it's more on cash basis. Okay, because company, many basically individuals, they pay tax through monthly deduction. So that is based on point of receipt. Okay, so the basis is cash. Okay, consumption tax, stamp duty. Okay, point of collection of revenue. So pretty much very consistent with accrual accounting. Okay, occurrence of taxable event. So even before the property tax split rent. So taxable event. So it doesn't say that when the tax is being assessed. Okay, so the submission is already done. So even before that, so receivable, tax receivable, and tax revenue can be recognized. Okay, stamp duties, levies, and penalty. Okay, fine and penalty. I think penalty for late payment, point of fine. Okay, penalty for late payment for assessment by relevant authorities. So not only the inland revenue. Okay, I think B, traffic fine. This one is for police, isn't it? So the police, the traffic fine, I think, any one of you have this experience of paying traffic fine? No one? You never, oh, very good, All right. But but for traffic fine is different. It's like an exception when payment is received and not when the fine is imposed. I think if you look at the reason here, because the amount of fine cannot be reliably measured in view of various discount and waivers. So basically, traffic fine is a way. I mean, it's not following strictly on the accrual accounting. Because of the measurement problem, measurement challenges. Okay, so that's why they have this policy. I think they still maintain this even between the transition. These are the policy. Right, contribution, give and donations. Okay, this one is pledge for donation. So the point of recognition is when the amount is pledged, and also when MOU is signed. So I think that's give rise to the receivable as well as the revenue. Okay, so this basically then with the disclosure requirements. Okay, some of you did ask questions when I discussed on the MPSAS. There are so many standards, but I'm not asking you to memorize the standards. Okay, don't get me wrong. Okay. I think more on understanding, but some items are a bit more specific and a bit different. Okay, try to remember because uniqueness in the case of accrual accounting in public sector. Okay, any questions? Right, okay, now question, then we move to MPSAS 24, presentation of budget information and financial statements. Okay, I think this is quite unique for government and the government sector because generally budget information is not disclosed to the public, okay, or to the other users except for the internal use. But then for public sector organizations and for government, because budget is it's been tabled and disclosed to everybody. Okay, it's about transparency. It's about the good use of public money. Okay, then even then it is required to be disclosed with MPSAS 24. Okay, so the amount, if you look at the original and final budget amount, and then the comparison with the actual. And then there's also a requirement of disclosure if there is a material differences between the budget for which the entity is held publicly accountable with the actual amounts. Okay, so I think this is So these are the presentation, pro forma presentation of budget information that need to be disclosed in the annual reports. To look at these are the budget item in terms of receipt and possibly definitely for the expenditure. There was an original allocation and there is final allocation. There's addition. Actual amount on comparable basis, difference, and then the differences, that's like variance. So all this need to be disclosed. I think, yeah, it's like what you learn in MA. So now for government organization, they have to publish, they have to disclose that in the annual reports. Okay, any questions? No question, we move to PPE. Okay, property, plant and equipments. Okay, I think there are certain unique assets here. Okay, will be discussed as well. Okay, PSAS 17 with regards to PPE, this standard applies to property, plant and equipment, including specialized military equipment. Okay, so I think it's quite unique. This type of assets, you can only see this for government entities. You don't expect this in private sector with military equipments. And then infrastructure assets, okay, road networks, okay, sewerage, okay, pipes, okay, water pipes and others. As well as civil concession arrangement, asset after initial recognition and measurement. So you can see if in MPSAS 32, they give rise to a concession asset. So those assets will be accounted under PPE, under MPSAS 17. But we'll discuss that separately. Okay, the cost of an item or PPE shall be reckoned as an asset if only it is probable that future economic benefits or service potential associated with the item will flow to the entity. Okay, so it's similar as we discussed just now. Okay, when the asset is being recognized, so there are two that the asset can demonstrate that it will provide the inflow of future economic benefits as well as service potential. Okay, and the cost or fair value can be measured. So the definition here is provided for service potential. Service potential indicates the capacity of an asset to provide goods and services in accordance with an entity objective without necessarily generating any cash inflow. Okay, so this is clearly mentioned, the definition of service potential. So unlike in the private sector, okay, all the basically asset must be at the end translated into cash inflow. But in the case of government, it also includes service potential. That not necessarily any cash inflow, but still the assets can be used to provide the services, government services. Okay, this is due to many of the assets and liabilities of entities within the public sector acquired or incurred as a result of the entity service delivery mandate. Okay, for example, heritage asset and parks maintained for public access as an example. Okay, so now we move to measurement. Okay, there are two levels of measurement, isn't it? Measurement at recognition and measurement after recognition. So when it is measurement at recognition, so if it is generally is at cost, okay, cost of construction, cost of purchase. But then there are also type of assets which are acquired through non-exchange transaction, and then the basis will be fair value. Okay, quite straightforward. An item or property may be acquired through a non-exchange transaction. For example, land may be contributed to a local government by a developer at no or nominal consideration to enable the local government to develop parks, roads, and paths in the development. So there's another. I mean, this one is quite common, isn't it? So if you look at any new developments in your housing areas, okay, in any community or in any development area, so there are part of that land will be contributed or be transferred to the local government for the roads, for the water, for the electricity. Okay, so this and then if you look clearly mentioned, even parks is attributed to the local government. So basically, local government, it become local government asset. So under PPE, this should be recognized by the government. An asset may also acquire through non-existing transaction by the excess of power of sequestration, okay, seizure for the state, okay, or by the states. Right, I mean, sometimes if they want to make lands or expressway, okay, okay. I think recently, if you look at given in the area of Gombak or Sentola, when they develop the Duke, okay, I think there is an acquisition of land, a forced sale. On I don't think it's a forced sale or forced transfer. But that one is sale, but definitely government will compensate based on the fair value. Okay, right. But in the case, it's like a forced sale. Okay? Generally, people just follow that, and there will be, there is enough compensation that they can move to other areas. Right. Under these circumstances, the cost of item is at fair value at the date is acquired. Okay, but I think this is done if it is in the case of sequestration, okay, without proper compensation. But I think in the case of Malaysia, generally, when there is a forced sale, so the owner will be paid at the market price. Okay, so I think that's general practice. Okay, so second is a measurement after recognition. I think it's very similar to MFRS. Okay, you have two models. Either you can use cost model or revaluation model. Right, and but the only thing for revaluation model, so that revaluation need to be undertaken with sufficient frequency. Okay. Otherwise, I mean, definitely both are subjected to impairment tests. Right, revaluation actually made with to ensure that the amount does not differ materially for that will be determined using fair value. The fair value item property is usually determined from market-based evidence by appraisal. The fair value of PPE is usually their market value determined by the valuer. Value of the value of asset is normally undertaken by a member of valuation profession who holds and recognized and relevant professional qualifications. So you can see that even clearly mentioned in the standard that it must be done by the valuer, property valuer. Okay, but of course, I mean, with regards to property valuer, it depends. Of course, I mean, it's not like the outright acceptance by the accountants. Of course, I mean, it is mentioned that valuer should provide, but accountants also need to assess the assumptions made by the valuer. Are they inconsistent? Are they very consistent with the assumption that is made with the accounting standards? Okay, and particularly, I think that is equally true when we talk about impairments, for instance. So because I think impairments are possibly much more rigorous. So is that like as good as what the valuer provide when they develop their valuation? Okay, for many assets, the fair value will be readily ascertainable by reference to quoted price. Okay, that is of course can be done through the market price with the similar transactions. For example, current market price can usually be obtained for land, non-specialized building, motor vehicles, and many types of plant and equipment. Okay. But for some public sector asset, it may be difficult to establish their market value because of the absence of market. Okay, so we can see some of the unique asset that is there in the hold by the government organizations. For some public sector asset, it may be difficult to establish their market value because of the absence of market transactions. For this asset, some public sector entities may have significant holding of such asset. If no evidence is available to determine the market value in active and liquid market of an item or property, the fair value of the item may be established by reference to other items with similar characteristics in similar circumstances and location. Okay, so that's another option. Beside the quoted price, you can develop the fair value. Okay, with the reference value. For example, the fair value of vacant government land that has been held for a long period of time there have been few transactions may be estimated by reference to the market value of land with similar features, topography, and similar location for which market evidence is available. Okay, so in that sense, I think it's quite, I mean, there's an available market price. But in many cases, the depreciation replacement cost of an asset can be established by reference to the buying price of similar asset with similar remaining service potential in active and liquid market. Okay, that's still you have that market price. Whereas in some cases, an asset reproduction cost will be the best indicator of its replacement cost. Okay, so basically reproduction is like reconstructing the facilities. I think the example is quite clear for us to appreciate what it means. For example, in the event of loss, a parliament building may be reproduced rather than replaced with alternative accommodation because of its significance to the community. Okay, so I think of course the event is least likely, but if you look at the Parliament of Malaysia, there's only building in such characteristic, in such place, okay, and for such purpose, isn't it? So how to estimate the fair value of such building, okay? So another, okay, in Malaysia, there are a few other, I think we'll see one example later. Of course, it's equally applicable to all countries. I think in every country, you have your unique buildings that is somehow being used by the public sector organizations or government. Right, classes of PPE for public sector, some of them are common, like land, okay, operational buildings, okay, but some are unique. Okay, you have roads as part of your PPE, machinery, electricity transmission network, okay. So basically, these are all infrastructure assets. Ships, aircraft, okay, specialized military equipments, okay, very unique. Motor vehicles, furniture and fittings, okay, office equipment and oil rigs, okay. I think for Malaysian government, oil rigs, okay, but that is generally under the PETRONAS, isn't it? Okay, example of PPE in the case of government, so bridges, right? They can be identified separately. Okay, I think for consolidation, I think possibly this time we can see that PETRONAS, but PETRONAS is a profit-making entity. But at the same time, it's also a regulatory, a statutory body. So how they going to account for this? It's interesting, remain to be seen. Okay, so what is the best way to account? Because the PETRONAS have that dual role. One, of course, basically generating revenue, and the other is as a regulatory body to regulate the Petroleum Act. Right, now we move on to heritage assets. Some assets are described as heritage assets because of their cultural, environmental, or historical significance. Okay, example of heritage assets include historical buildings, monument, archaeological site, conservation areas, okay, nature reserve, and work of art. So I'll show you example in Malaysia. So which building is this? I should have find a better photo. Which building is this? What's the name of the building?
Bangunan Sultan Abdul Samad.
Right, Sultan Bangunan Sultan Abdul Samad building. And what is the use of this building currently? Mainly
Tak tahu.
tourist attraction. Tourist attraction, or okay, it's basically a courthouse. Okay, it's a courthouse, right, for federal territory. Okay, so it's a historical building, but used by the judiciary, right? And then I think there are so many. I think Malaysia, because we are very close to the Ottoman Empire, so you can see that the building design is based on Ottoman. And then on top of that, there are more buildings like by the Malaysian Railway, the KTM company also use all these historical buildings. So in a way that it can generate cash as well. Okay, so if you look at the characteristics, including the following, are often displayed by heritage asset. Okay, their value in cultural, environmental, educational, historical term is unlikely to be reflected in the financial value based on market price. Okay, so I think it's hardly you can find the fair value based on the market price. Legal and statutory obligations may impose prohibitions or severe restrictions on disposal by sale. They are often irreplaceable and their value may increase over time, even if their physical condition deteriorates. And it may be difficult to estimate their useful life, which may, in some cases, be several hundreds of years. Okay, so it's like infinite useful life. Okay, public sector entities may have large holdings of heritage assets that have been acquired over many years, okay, including by way of purchase, donation, bequest, and sequestration. These assets are rarely held for the ability to generate cash flow. Okay, so there's one item here. And there will be legal or social obstacle to use them for such purpose, for commercial purposes. I think another in care we have central market, all that. Okay, anyway, some heritage assets have future economic benefits or service potential other than their heritage value. Okay, so for example, historical building be used for office accommodation. These are basically very closely related to, as an example given, Sultan Abdul Samad and KTM buildings. Okay, in these cases, they may be recognized and measured on the same basis as PPE. For other heritage assets, their future economic benefit or sales potential is limited to their heritage characteristics. For example, monument and ruins, the existence of both future economic benefit and sales potential can be affect the choice of measurement base. So is it based on fair value? But I think the difficult part will be to develop the fair value. Right, heritage asset, okay, if cost is available, it should be measured at cost. If it is impracticable to determine the cost, then it just be measured at nominal cost, which is RM1. Okay, so that's a policy with regard to heritage asset. Because I think it's almost impossible to have a fair value, isn't it? Unless if it is reconstructed. Or maybe to the extent of where there is a reconstruction, okay, so that cost can be estimated. Anyway, there's a disclosure requirement. Entities that recognize heritage assets are required to disclose the measurement basis, depreciation method, cross-carrying amount, cumulative depreciation, and reconciliation between periods. These are disclosure requirements. Okay, so these are heritage assets. We move on to infrastructure assets. Some assets are commonly described as infrastructure asset, but there is no universally accepted definition. But these are okay. I think if you look at these characteristics, they are part of a system or network. Okay, if you can think of a road network, just now they mentioned about telecommunication. Okay, but in Malaysia there's also another. We have a pipe, a water pipe. Okay, water pipe is basically crossing the peninsula from north to south. So even, of course, water is basically in the hands of a state, but water asset is in the hands of federal government. Okay, so it should be accounted by the federal government and maintained by the federal government. They are, and then secondly, they are specialized in nature and do not have alternative use. Okay, so they are immovable and may be subject to constraint on disposal. Okay, there are those with characteristics will be classified under infrastructure assets. Okay, although ownership of infrastructure assets is not confined to entities in the public sector, significant infrastructure assets are frequently found in the public sector organizations. So that's then PPE, once it is recognized as infrastructure asset, then the accounting is using the PPE, standard for the PPE. Okay, example, there is road network, sewer system, right? Water and power supply and communication network. Okay, so another asset is asset by third-party land. Okay, Section 5 on National Land Code 96. Government buildings sitting on third-party land shall not be accounted for as PPE as federal government as the federal government is not the landowner. Okay, but then the building itself is owned by government. Okay, the land may not be accounted. Okay, however, government buildings sitting on the third-party land can be accounted for as PPE if ownership or control over the building can be demonstrated under the following circumstances. So there is formal agreement or leasing arrangement with the landowner that give the government the right to control or use the building for a specific period of time. Control given by a legal stature. Okay, Water and Service Industry Act that give the government the right to control and use the building. Okay, these are, I think if you look at this, basically the recognition, the existence of legal agreement is very important, because at the end to establish the right to control and the right to use, okay, before the recognition of the assets can be made. I think this one is definitely okay, can be. Not only that, I think certain government assets, particularly at the state or at the district level, where multiple government basically sharing the building, where the federal government agencies, state government, as well as local government. Okay, but of course the question is, this building, is it a state building? Is it the building owned by, controlled by the federal government? Okay, need to be established. Right, and now the requirement for PPE disclosure. Okay, so it will be classified or presented under non-current assets in the statement of financial position, and with the net book value. On top of that, there is also information on the reconciliation in terms of all the detail. I think quite similar to in the private sector. Okay, in terms of disclosure. Okay, I think that's about it. Next class we'll cover on MPSAS 32. Okay, MPSAS 32. If we have a quick look, I think for the PPE 17, isn't it? Right, you can check in the manual. So what are the relevant? Quickly, yeah. Yeah, it's on page 26. Okay, you can have a look on the relevant accounting, because I think in the manual they provide scenarios. I think that's good for you to be able to appreciate a bit more detail on the accounting treatment. Okay, but generally to tell you, I'm not going to test you on something that you learn in other subject. So if you think about the exams, so the test will be on the unique standards. Okay, and even PPE, but I'm not going to test you how to calculate depreciation, okay, for the exam, because you learn those in under other subjects. I'm not going to test you on impairments, okay, because you learn that as in other subject as well. Okay, just to give you some assurance, because I feel like disposal of fixed asset, for instance, because some students are, they're a bit anxious because few standards, and of course, I don't expect you to memorize the standards. Okay, so I think pretty much that what is it. Any question for this class? Okay, so if no questions, I will end this. Okay, with wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi. Oh, sorry, hold on. I think there's one more thing. Did I mention you about Tableau? Tableau for this class?
No, sir.
No, sir.
Oh, okay, all right, good. All right, in the GC, if you check your GC, right? If you check your GC, I provide you, okay, this is not for exam, this is just for knowledge purposes, right? Okay, so if you look at the classwork, I think, okay, if you look at this, I provide the copy of MPSAS.
Yes, sir.
So I was presenting to myself. Unbelievable. Okay, anyway. Okay, look at, yeah, you can see this, isn't it? In your Google Classroom, you have this Tableau software. Where did I, what was the point that I basically disconnected? Did I explain this?
No.
No, sir.
Oh, okay. So right from the beginning. Okay, this is only for sharing purposes. Okay, you can learn this software by yourself. Okay, what you can do is you follow all the instructions based on these PowerPoints, right? Basically, we have this workshop. I think I can just simply share with all of you. I think you register online and then download the software, and you can learn yourself. Okay, this is basically like PowerPoint, but it is not PowerPoint because PowerPoint is quite limited in data analysis. Okay, it's not limited. I think you can't do data analysis. But here is you can do analysis as well as presenting the results. Okay, using okay, very good way of presentation. That's one. The other is you can analyze the data, big data. Basically, the idea is basically analyzing big data information. All right, but of course, there's another software that you need to learn. To how data grabbing software like Python and all that. Okay, it's up to you when you to learn, but I think it's good skill for you to develop yourself because most of you are finally a student, isn't it? Get yourself familiar with all this software. The other is I also provide, okay, once you have download the software, for you, you need data, okay? So this basically, I provide the data in Excel. Okay? I think it's related, mostly the data is about sales, okay? Sales and customer details, okay? For you to understand how to use basically the software. Another, there's also information or file on how the presentation is being made in examples. Then you can see the features of this Tableau. So this for self-learning, this for sharing purposes, I did mention last time that I'm going to share this software with you. Okay? Any comment? No comment, All right, so I think that's all about it. Okay,